Your take on these numbers?
So if you look at the CPI, 0.2% is definitely disappointing. But I would say that, okay, if you look at the headline, a lot of weakness is actually driven by pork prices, which have been falling in the past couple of months. So for the trajectory for CPI, we think that actually over the second half of the year, with the continued improvement in the services sector, and as considering the base effects will be very low last year, then it may probably pick up very gradually. But still, we think that because the consumer demand is going to be quite soft, the normalization process will be very gradual.
It's the factory gate, the producer prices, which are a surprise to the downside, and the suggestions that it should have done that. Well, it could perhaps tip the authorities towards finally doing something in terms of proper monetary stimulus. What's your take?
I think the overall focus is still the underlying consumer demand. And actually, if you also look at the April data, it's been disappointing. The high-frequency data recently also suggests that the May activity data will also probably be pretty sluggish. So I think taking all these weak price momentum and weak activity indicators overall, I think there's the stronger argument for the policymakers to do more now.
It seems to be there's a disconnect, though, about what policymakers have said, right? If they're still maintaining a 5% target, do you think that more policy is needed to reach that target? People were saying it was a comfortable target. Is it still a comfortable target at this point?
I think for now, what we see that it is still a comfortable target, considering the base effects are just so significant to push the GDP growth to much higher this year. 5% should still be reachable, and I think that only require maybe a trend growth of maybe below 4% to reach the 5%. So we think there's no difficulties for policymakers to reach that target for now. But I think the question is really with the activity indicators slowing so much in April, I think it really highlights that confidence in households and corporates are weakening after the reopening recovery in the first quarter. So that will require more policy stimulus for the policymakers to really take the households and corporates out of this confidence shock.